That intro sounded better in email than it did in front of all the people, but you'll understand why later. Okay. Tidefall, just brand new company. We launched 2 weeks ago. Like Anna said, I was doing global equities before. I wish there was a more exciting slide I could do in terms of the background. When I was younger, I was very kind of obsessed with Munger and Buffett. This is me at 21. I went down to Omaha and figured it would be really cool if I could get a picture beside Warren Buffett's car. Nobody thinks this picture is cool, but at the time, I was incredibly happy about it, as you can see in my dad genes. Anyways, now, later on, I'm much more appreciative that there's many approaches in investing that work. And I think a huge part of that is to grow as an investor, you really have to kind of figure out who you are as a person, understand your strengths and your emotional characteristics. So a lot of just becoming a great investor is becoming who you are. Strategy, again, it's even more boring than the last slide. I just sit in my condo and read all day. There's nothing really going on that's complex. I cover a lot of sectors, so I try to read a bunch of different stuff. One thing I do that's a bit different than a lot of people in this room, I would say, is I use Twitter extensively for finance Twitter, and I'm on that at least 2 or 3 hours a day. I worked remotely for Australia for a number of years, and having Twitter as a sounding board to kind of put your idea out, people on the internet, they love trashing you, right? So you get something wrong or you're looking for, a different opinion, when you have like a good network, it's just really good as a sounding board. Consequently, I don't have many opinions on a number of investments. There's a lot of advantages for that. Everybody says they're concentrated at most of these things. Like I'm talking less than 10 stocks, so really concentrated. And it's really good because it allows for a deeper understanding of the business, and it's just something that seems to fit with my personality. If I want to look at the stock, the 10-year test is kind of what I go on. Could I see myself actually holding this for 10 years? And most of the time the answer is no, and I just don't look at it. I'm not trying to closet index or anything. There's no advantage. We're just kind of living and dying by our long-term returns here. So given I know so little, what do I know? I know online dating will be dramatically bigger in 10 years. Like App Annie 2 weeks ago, they came out with a report. They said in-app spending on dating apps ex-China had more than doubled from 2017. The market is growing like crazy. The undisputed leader today is Match Group, and they have a lot more brands than people think. The cartoon, actually, it's funny, but it has a very valid point. It talks about, I prefer the old-fashioned way to meet somebody through alcohol and poor judgment. It has, in a sense, like all of humanity, we've been doing this kind of offline analog dating. But when you think about what the internet has done to so many industries, whether it's eBay matching buyers and sellers, I think it's going to be romantically irresponsible not to be on these dating apps in the future if you're single. So the algorithms could be very interesting long term. This is just a chart talking about how meeting through friends and through university, and especially meeting through church, it's falling off a cliff. And online for heterosexual couples are approaching half. Some surveys have it as over half, but you can clearly see that online dating is going to be the dominant method long term of how people meet. Some more demographic data, just showing how millennials and Gen Z, they date differently relative to the previous generations at that age. They're much more likely not to have a steady partner. And I think a huge part of that effect is because of these online dating apps. You don't really need to settle down or worried about finding somebody if you can just log on and see that there's 10 high-quality potential matches. It's just people are much more willing to date longer than they did in the past, which is obviously a big tailwind for the industry. Barry Diller, I think IAC, I know a lot of people in the room know this company, but I think it is massively underappreciated by the street. Since 1995, he's done 14% a year compound returns, so better than the S&P, Berkshire Hathaway, all the other media companies. And the reason I talk about IAC is because Match Group, which is the company I'm talking about today, was partially spun off in 2015. They did 20%. The remaining 80% will be done Q2 this year. Consequently, because it's such a low free float, the shares are insanely volatile. I think the new shareholder base will kind of quiet things down a bit, but again, I'm looking longer term than just Q2. Clayton Christensen just passed away. The only business book that Steve Jobs ever recommended was The Innovator's Dilemma. I love it. And I think the living embodiment of the innovator's dilemma in a corporate culture is Barry Diller and IAC. There's a couple quotes talking about, disrupt yourself before somebody else does. The reason why Tinder works so well within IAC is because they left it alone. The culture here is very good to disrupt themselves. And I think culture, in terms of moats, if you're looking at moats of businesses, culture is my favorite because it's the hardest to replicate, and it only comes after years and decades of kind of training the employees to work that way. If you look at the bottom of the slide, there's 10 different executives, and this is how IAC disrupts itself. They're all competing internally for resources, and they're positioning their dating products against each other. It obviously creates some self-cannibalization, but when you're trying to create a dynamic company for decades in the future, this type of competition is very healthy. So Match Group follows what I like to call the Luxottica model, an illusion of choice. Most people aren't aware that all sunglasses are made by one company. Tinder, Match controls the majority of the top online dating brands in the West. So we have Tinder, Match, POF, OkCupid, and Hinge. The ones that I think are most interesting, obviously by far and away, is Tinder, and I think Hinge is definitely taking share from Bumble right now. Bumble's private. It was taken over by private equity. And there's just some smaller niche brands you might not be familiar with. Medic, Pairs, Our Time, older demographic. The point is, as these networks grow, they just have this continuous bundle and unbundling approach. And it's really good, in my opinion, that Match is able to kind of capitalize on the different segments. If you're not on dating apps, which I'm assuming most people, is anybody here on Tinder? No hands go up. There's a huge online dating stigma, which I'll get into in a bit. But this is probably the most interesting slide if you aren't aware of the mechanics of how Tinder monetizes. So as a free user, you get one free super like per day. A super like lets the person know very quickly that you're interested in them. So your odds of actually matching with them are much higher with a super like. If you're a Tinder Gold user, which is their monthly subscription product, it's about $10 for most users, you get 5 per day. So 5 obviously better than 1. But what's so beautiful of this monetization method is the potential match doesn't know if you've paid for it and had many super likes, 5 or more, or if you're just a free user and you really think this person's incredible. It's very similar to a business being able to list themselves on Google at the top of the search result without actually having to disclose that it's an ad. Consequently, there's this massive incentive to pay if you're looking to do well on these apps and you don't look like Brad Pitt. Just in terms of, I think Tinder Gold, their subscription product, is massively underpriced. It's $10 a month for most users. If you look at Calm, a meditation app, it's $13. I'm sure it's a wonderful app, but it doesn't give you the ability to use the world's largest dating network for your personal life. There's other features with Tinder Gold that you can see everybody in your city that actually wants to go on a date with you or wants to meet you. That's incredibly valuable, not just in time savings, but just figuring out what kind of would make the most sense as a date. And there's the passport feature. Nobody else can really offer this to any scale. So if you have a business meeting on Friday, you could on Thursday from Toronto, a business meeting in New York on Friday, and Thursday on Toronto, you could move your profile to Manhattan. And then when you wake up, you're going to see 50 people that want to meet you or like you. And by the time you land, you could have a date planned like after the meeting. Like, it's just an incredible time savings. And that's $10 a month. That's like less than the price of a drink at a bar. So it just seems stupidly underpriced in the scheme of things. So there's new monetization that Tinder is trying beyond Tinder Gold. And the company just released results today. The stock's down 8%. If you're looking to get in, it's better than yesterday at least. And I think what the street missed today in terms of the report and management is trying to telegraph to you is they're going to more of this model. They're going to an a la carte model where you pay for the feature at the time. And you can tell from the price at the bottom, it's much more profitable for Match Group. So Super Boost, it's kind of equivalent to digital VIP or bottle service at a club. This is a screenshot from my Tinder. Yeah, I'm not ashamed to admit I have too much money invested in this company not to actually be a user. So this is from Miami, and what this does, if you're willing to pay this price, is it means when you log on, when a potential partner that you're looking for, your target demo logs on, you're going to have this big face on their screen first, so they get to see you, much like at a bar when you order, champagne or something, and people, they come out with the fireworks. It's ridiculous, but this is the digital equivalent to it. And yeah, look at the price, right? It's $100 for 6 hours or $180 for 12. That's much better than 10, and I think that's what you're going to see the monetization of Tinder to continue to go for. And the beautiful thing about these types of network effect businesses is as the network grows larger, the value of the curation tools, the stuff like figuring out who likes you, it increases in value. You're not going to sit there if there's 1 million people in your area swiping right. It's ridiculous. It'll take too long. So they're able to charge more for these types of features if the network is very active in the future and grows. But even with the current monetization, a lot of people don't know this, Tinder is the #1 grossing app, both on iOS and Google Play. This is from App Annie for 2019. So ahead of stuff like Netflix and YouTube and Pandora, it monetizes very well. If you're feeling this presentation, you think there might be something into this investment thesis, and you want to get to this blue sky super bullish scenario, go on Netflix, watch Black Mirror, Season 4, Episode 4. The episode is called Hang the DJ, and it's an alternative reality where these dating apps are so dominant in the future that people just kind of outsource their romantic lives to them. The app tells you where, when, how long, and what you're supposed to do on this date. And the reason people are so willing to do this is because the algorithms are so strong that it's able to say that there's a very high probability this might be the right person for you. And I think what's so incredible about people swiping on Tinder the past 5 years is that we're kind of training their AI to figure out what kind of relationships that people are looking for, what works. And maybe not for Tinder, but an app like Hinge, which is more relationship focused, it's not going to be surprising to me if in the future, 10 years from now, it goes, there's an 80% chance this person is like their equivalent, they wouldn't say it this way, but of your soulmate. People would be willing to pay a lot of money for that if they are the network that's able to provide the highest accuracy. So it's just I know I'm bullish, but this is a super bullish scenario. Again, when I asked about who's on Tinder in here, I guarantee somebody is on Tinder in here, but nobody really wants to broadcast that. And consequently, that type of effect, thank you, that type of effect is really good for going before antitrust committees, regulatory committee. You're not going to have the same types of consumer advocates saying, this is ridiculous, I'm spending $2,000 a month on these apps, because you look absolutely desperate. So it's a great way of avoiding it. And if you look at the 10K of Match, they do not disclose the number of users on it. They define users as the paid subscribers, which is 10 million for the entire company. There's over at least 100 million people using this globally already, but if you're trying to avoid regulation in the future, I think it's brilliant that they use the smaller definition, the more conservative. Again, that's like a Barry Dill or IAC long-term thinking. Some bear points. Let me just have a glass of water. I'm losing it. There's a finite customer life. This isn't a beautiful SaaS business like Adobe where you lock the people in for a century long-term as they kind of get embedded in the workflow. A counterpoint to that is people are getting married later, and what's so wonderful about getting married later from a monetization perspective is you generally make more money in your 30s and 40s than you did in your 20s. Another bear point, there's new competition, low switching costs. It's very easy for these apps to get started. That being said, there are network effects, and it's much harder to launch a dating app today than it was 5 years ago. And again, Match is able to disrupt themselves with other brands to capture that. IAC's oversight is now removed, which is a big part of my thesis, but thankfully IAC CEO Joey Levin, who's been a big part of the company's success, will remain on the Match board as executive chair. So will the CFO, he'll stay on. And the most common one I hear is Facebook dating. What about Facebook? Facebook's obviously gigantic, it's huge. There's been no impact on Match in terms of the data that's been coming out. Management has said that, and the numbers back it up. Canada was actually a test market for Match Group, for Facebook dating, and it was ridiculous how bad the product was. Of course, I used it, and the product was super buggy, which is really insane when you consider the resources that Facebook has to devote to these things. But the big thing what Facebook dating was trying to do was mesh your events with other potential people so that they're able to leverage that data. It just never took off. It really seems like people want to compartmentalize their dating life from their social media life. When you log on to one of those apps, you don't really want to, kind of commingle them. And there's just some funny stories of people on Facebook dating, matching with, family members and friends. But I'm sure they would work that out long term. Very briefly, there's just no sign of a Tinder slowdown. There was another presenter talking about what do you know more than the market. The market, all the sell-side reports have a revenue which is currently growing 20%, adjusted EBITDA higher. They just have it plateauing because nobody wants to go to their boss and say, their portfolio manager, and go, listen, it's growing at 20%. How long is that going to continue? Oh, it could be for 5 or 10 years. You just don't do that into a sell-side report. It's too aggressive. And I don't need those numbers to work out, but if you have anything like the historical growth of what Tinder's doing, you look at the ARPU going 20% a year, this could continue. I think we're much closer to a second or third inning of this industry than the seventh or eighth. I think the growth could continue for decades potentially above GDP. And just with such a software, we know it's such a good business, right? Like earlier in my career, I had to do industrials like Fiat Chrysler. You're looking at cost of goods sold. You're trying to figure out what the price of steel is going to be. You're looking at unions and labor disputes. They're selling digital tokens, right? Like it's much better business. It's almost pure profit in the sense you're just selling access to their network. So it's incredibly high margins. So if they're able to continue the revenue growth, the EBITDA margins will be ridiculously high, and they're trending that way right now. Yeah, just talking about, this is more about the TAM. There's about 10 million paid members on Match Group right now. Citigroup estimates there's 920 million adult singles ex-China that have access to the internet. So we're talking like a 1% of potential paying users. Obviously, you're not going to have the majority of users pay for online dating. It just doesn't work that way. It's kind of like a bar. A lot of people are able to get drinks for free. Not me, but yeah, it's just very possible that 1% is able to increase, 3, 4, 5, 6, or double digits. That's not going to surprise me if in 10 years it's higher than that. Yeah, and so that's just kind of the biggest difference between what I'm seeing versus the street. I'm just a lot more long-term in terms of my bullish opinion. The valuation today, you can get it cheaper. Stock's down a bit. It's about 20 billion for the market cap. But you look at the rest of these numbers, I'm a value guy. These aren't exciting numbers. There's nothing really interesting like 9 times revenue on a forward basis, 30 times forward earnings. It's not statistically cheap, but rarely are great companies ever statistically cheap. There's a bit of leverage as well. It's, under 2 times net, and it's going to increase post-spin. Some of that money will go to buy back shares, but nothing they can't handle in terms of what they've done in their capital structure before. So in summary, I think Match Group is really interesting because it's an emerging sector with massive tailwinds. There's huge scale with Match Group itself, having that portfolio of brands. They're willing to disrupt themselves. And yeah, it's a high multiple stock, but it comes down quite quickly if you have anything like the historical growth. So we're long, and I'm happy to answer any questions.